Welcome, everyone, to another episode of the Gold Silver Bitcoin Show, brought to you by GoldSilverBitcoin.com. Thank you, everyone, for joining us. We are sitting down today with Clem Chambers. He is an author, journalist, and CEO of ADVFN and Investors Hub. Thank you so much, Clem, for joining us today.
Very good to be here. And I just start off by saying, just as you have to say what you've got in the market and all that sort of stuff. I have gold. I've got gold stocks. I've got gold ETFs. I've got gold options. I haven't got gold futures, funny enough. I've got gold. I've got silver and all the following what I just said before, options and shares and stuff like that. I've also got a lot of crypto.
What was the experience that led you to investing in gold and silver? What did you learn about the world that led you down that path?
Well, I've always not been a fan of gold. I wouldn't necessarily agree it's the barbaric relic that Milton Keynes, Maynard Keynes. Sorry, Milton Keynes is a place in England. Maynard Keynes called it, but it is a difficult thing to own because it's hard to secure. It's these days extremely hard to buy. And, it's illiquid because if you've got a gold coin in the sock, turning that into dollars or whatever you want to turn it into, it takes time. It's not like a Amazon share where you can go click and it's done. But, with the Fed and the Central Bank of Europe, ECB, and the Bank of England, and the Bank of Japan, and the Bank of everywhere going, Control P, print to infinity. It's like 101 from children's economics that gold is going to go up because gold is a reasonably decent store of value and it has been for a long time. And I've owned gold from the Iron Age, I've owned gold from the Romans, I've owned gold from the medieval period, I've owned gold from the modern period in terms of numismatics. So gold is I've gold panned even. So gold is a stalwart of financial history, and it is something that's hard. Well, it's not impossible to fake. It's very difficult to fake, and difficult to dig up cheaply, and it's difficult to expand production. And people love gold. I think really it's the human love of gold that is its intrinsic value, and that comes from the history of gold, which is if you had the gold, you got the girls, and it's still the case that if you have the gold, you get the girls. And that means that gold is genetically embedded in people and therefore has a very firm and stable value. The only way gold can lose its value is if someone finds a lot of it. That has happened in history. I mean, it happened during the late Middle Ages or the Renaissance when the Spanish went to South America and found mountains of gold. It happened when they found lots of gold in South Africa, etc., etc. So gold isn't necessarily as stable as it's put up to be, but nonetheless, it's kind of investing 101 that gold is a store of value, is flight capital, and is when times are bad, gold is good. And with the central banks printing money like confetti, seemed like a no-brainer to get gold. Now the funny thing was, the thing that shocked me was just how cheap gold shares were. And that you can buy a gold share in the UK, one that mines lots and lots of gold, and they are paying you 5-6% dividend every year. And it's the same with American stocks. American stocks don't like to pay dividends, but the gold miners, they're paying some dividends, nice dividends. And you've got people like Sir Bernie Stillwater who are paying a fat dividend. That's platinum, of course. But I like platinum as well. I like platinum particularly well because that's going to be one of the keys to the green wave that we're coming under, because platinum is one of those catalysts that they're going to be using. I do already use a lot of in things like all the battery tech and the hydrogen tech that is coming. So everywhere you look, these precious metal guys are paying fat dividends. So if you buy them and the price don't go down, at least you get your money back in dividends against inflation because they're paying a dividend that's equivalent to inflation. Now, if you buy Amazon and Amazon don't go up this year, it doesn't go down, you lost 7% in buying power. And, if you're counting inflation right or differently, you could probably get up to 10, 11, 12% inflation if you wanted to calculate it a different way. So if you just sit there in cash and you just sit there in equities, market's got to go up 10, 12% for you to be standing still. Well, that's enough to make you worried. And there you've got these gold companies paying you 5, 6, 7% dividends. Rio, big mining company, been mining since they were mining Rio in, I think it was Spain, in the 19th century, paying a 10% dividend. So, that's something to get excited about. However, it must be said that in the last year it hasn't moved. And the reason for that is complicated. My favorite explanation for it, one of the explanations that I go around and ask everybody, why is gold not moving? And one I've heard a lot is that why would you bother with gold when there's so much more exciting stuff out there? Why would you buy gold when Apple could go up 30% in a year? Why would you buy gold when you can play around in crypto and it goes up tenfold? It's just too boring. Well, actually, I believe the reason why gold hasn't gone anywhere is that half of consumption of gold, roughly, it might be a bit less, it might be a bit more, is jewelry. So if they dig a ton out of the ground, half a ton goes into jewelry. So the supply is consumed by at least half by people buying trinkets, particularly in Asia. But that's where a lot of the gold that comes out of the ground goes. And that new supply is sucked up by jewelry. However, under COVID, that jewelry market collapsed. So you've had not much less supply, a big drop in demand from the jewelry market. However, a lot of that's been picked up by central banks buying it and by investors buying it. But now the jewelry market is going to be coming back, and the investors are not going to go away because inflation is not going to go away. So you should get a really strong tailwind from an increase in demand into jewelry. When it comes to precious metals, there seems to be a mismatch with price, because things like platinum, they make an incredibly small amount of platinum every year. It's such a small number. I don't even want to say what it is because I'm going to get it wrong. It's going to be too much. It's either 10 tons or 100 tons. It's just a ridiculously small amount. All right, platinum is expensive, but it's a small amount for a metal that is going to be pivotal for things like the hydrogen economy. So it's like, it's a no-brainer. But it must be said, the prices aren't moving. So there's, some investors will say, if your idea is strong, you just have to wait. And I do know for a fact, because I when I was a child, my family, one of my family members was a big speculator. And, he would say, well, if you see something that's going to go up a long way, you just buy it and you wait. That's all you do, you buy it and wait. And if you see the future, it will appear to you a lot closer than it really is. Clairvoyance, it's going to happen tomorrow. It's going to happen next month. The whole world's going to do this and do that in the next 6 months. Or this company's going to be the biggest company in X, Y, and Z in a year. Actually, it takes 4 years. Because you see it clearly. For you go A plus B plus C plus D, this is a result. The world doesn't see it like that. It doesn't even see A. You see it clearly. You know it's going to happen, but the world doesn't see it like that. The world's busy going to work in the morning or having a problem cooking dinner or it's got indigestion or wants to play with the cat or has to go out in a hurry because the wife's tire's gone flat. So most people are not looking to the future like that. And when they do, they're distracted. So it takes the world a lot longer to catch up with the people that see it clearly. So that's my excuse why I've got so much of this stuff and it's not really moving up. But if you actually look from it from a technical point of view, it had a really big rally for many years. It reached a peak and then it pulled back. And it's pulled back over the last couple of years now. But it's now not going down. It's going sideways. If anything, it's starting to move up. So that's what I see. And I kind of agree with all my friends who are traders going, why would you buy gold? It's so boring. You can get a 10% pop in a stock. When the numbers come out on Wednesday, what are you doing? Why aren't you investing in some biotech that's going to, make everyone's noses shrink and look pretty? That's where the money is. Why would you bother with gold, for goodness sake? It might double in the next 4 years, but really, do you care about that? Well, as it happens.
All right. We've got so much to talk about. Now, I want to kind of dig in. You were talking a little bit about financial history and gold throughout the ages. You mentioned the discovery in the New World of gold, for instance, which, in my understanding, led to the Baroque period in Europe.
Well, they didn't go broke. They made a lot of money. So it's my little broke joke there.
I like that. Okay. Financial history. What is gold's role throughout financial history dating back to early times?
The way to look at things, right back at the beginning of time when they made currency, silver was a lot harder to mine than gold. Because gold, you just went in the river with a sheepskin and put the rocks on top of it and washed it around, which was the primitive sluice box, which is where you get the golden fleece from. And there you got gold. Well, silver, on the other hand, you have to do a bit of fairly strong chemistry to get most of that. And in fact, back in the day of the gold rush, they were coming across quite a lot of silver. And the gold and silver was mixed together. And they would go onto a river and they would be panning it. And it'd all be this black gunk. Oh, no, it spoiled the whole claim because it's hard to get the gold out from amongst all this heavy black gunk. Well, that was silver. And they had no way of getting the silver out of the black gunk. And it wasn't until they found a way of smelting silver with a particular chemical process that all that silver got unlocked. So silver was a lot rarer and it was a very beautiful metal. Back in those days, silver didn't go black. Silver didn't go black until the Industrial Revolution because it's the sulfur in the atmosphere that came from the coal that makes gold go black, silver go black, sorry. Before that, it was this beautiful white silver metal and it never went black. So, they loved that. And I think the gold-silver ratio was 5-1. And if you actually look at coins, the coins were people say, oh, well, kings made them and they were for money and they're for currency. There's an element of that, but they were also ways of using raw materials as a barter method. So you would have silver and gold because they would turn them into silver and gold items. And I've got something here, actually, which I actually found recently. And that is a tin potting of the Celts. So their currency was tin, because tin and copper makes bronze. So if you wanted to make yourself a bronze axe, then you had to get tin. So they had currency that was tin, and you take the tin coins, or worth a certain amount, and smelt them with your copper. They had copper coins, and you'd make bronze. So that was their way of making bronze. And the silver, obviously, you'd make it into jewelry, and gold, and the same thing. Make that into talks and everything like that. So when they find big pots of copper, some archaeologists say, oh, it was a votive offering to the gods. No, it wasn't. It was the people that made bronze pots and bronze brooches and bronze, fibulas, because that would be their raw material, be the coins. And even the Victorians used to take coins and make them into dishes, and they would embed them in dishes. And it was called coin plate sometimes. And they would just take the coins, ham them out, make silverware from it. So that was way back then. And then silver was much more valuable as a ratio to gold than it is today. And then you get to a situation in modern times where it gets to 20-1. Yeah. And when modern money was going, it was 20-1. And then when they took the silver out of coins in circulation, it went to 40-1 because the gold went out of circulation, but the silver stayed in. And after the First World War, when all the countries in the West were bankrupt, they went, oh, all our coins are pure silver. Oh, let's get them back and make it only half silver. And so the silver coins were silver, half silver. And in the UK, in 47, after they came out of the Second World War, they went, oh, we could use that silver now, And they took all the silver out when silver was never seen again in the coinage. But the gold ratio was the same. So silver went from 20 to 40-1 from 1920 onwards. And now it's up at 80, which may or may not be the right price for silver. Silver is the fast horse of the two. Silver's the one that moves. And if you're somebody that believes in the end of the world, like I know a lot of Americans do, they buy bullets and get themselves a compound up the hill and go off grid and all that. Gold is not much use. Because if you want to buy a chicken, you don't want to buy it with a gold coin. You want to buy it with a silver dime. You might be able to buy a chicken with a silver dime. So you need silver coinage for buying things. And in the old days, copper was pocket money. You kept copper in your pocket. You kept silver in your wallet. And you kept gold at home in a pot buried in your basement. And that was the three calibers of metals. Bronze for buying and selling, going and getting a pint of beer or whatever, jug of beer from the local ale house or whatever, buying a chicken. Silver would be for buying a bigger chicken or a couple of chickens or 3 or 4 chickens. Gold, you'd never see gold. So gold would stay, unless you're very rich, but gold would be something that you would keep in a hoard or a trove. You'd keep it, as I say, in your sock, or bury it in the basement. Which is, if you're a treasure hunter like me, what you look for is a house that's burnt down. And then you go treasure hunt around the burnt mark of the house in the hope that when the house burnt down, they never came back for the pot of hoard that was buried in the basement. And that's how you find hoards in Europe, by doing that. That's the way you go.
Have you found many hoards in Europe?
There's a lot of hoards to be found in Europe. In the UK, somebody pretty much every month finds a hoard worth $1 million. So if you count up how many hoards get found in the UK that are worth $1 million, there's 12 or 14. And if you treasure hunted every weekend for your whole life, you'd find one. That's the probability of doing that. But throughout Europe, the fields are full of coins, and tons and tons of copper coins because they were in the pocket. Now and again a silver coin because that would have been in a wallet or in a purse. And very, very, very rarely, one in 10,000 coin finds, you'll find a gold coin. And if you think a copper coin takes you an hour, you can work out how many hours it takes you to find a gold coin.
Financial history of gold. Any other comments on that?
Well, you could go on all day about the financial history of gold.
Sure. So let me tell you what I got laid out here. You said so much stuff in your first kind of comments. I wrote down financial history. You seem to have a wealth of knowledge there dating back throughout history, which is something I find fascinating. Numismatics, it seems to be something that you're interested in. I want to talk a little bit about that. Dividends, platinum, jewelry, gold art. So let's start with you mentioned the late Middle Ages specifically. What do people need to know about the late Middle Ages in terms of precious metals and money and financial history?
It depends what you want to class as the Middle Ages. When I was a child, the Middle Ages went from 1000 to about 1450. And nowadays, they have you believe that after the Roman Empire fell, that was the medieval period, and that goes up to the 1450s. But if you go to the history of gold, for example, all the gold was out east. There was hardly any in the Western Empire. It was all out east. And when Constantine decided that it was safer for him to have the headquarters of the Roman Empire in Istanbul rather than in Rome, that's where the gold stayed. And so there was gold through the Roman Empire, and there were big periods of lots of gold, lots and lots and lots of gold. And then the Roman Empire fell. Byzantine kept on going. But in the West, gold coinage kind of vanished. What happened was the people that came along after the Romans, the Ostrogoths and people like that, who were around for about 100 years before they fell to bits, the gold gets smaller and smaller and gets watered down with silver. And then suddenly, about 650, 700, no more gold. And it's all silver from there on in. And it goes silver all the way up to about 1400. And then gold is reintroduced. Where that gold came from, I have no idea. But up to then, it was silver pennies, which was in English currency, it was LSD, pounds, shillings, and pence. And you say pence, that's D's, not pence, right? But D's for denarii, which was a Roman silver coin. And that had become in the end, was a silver penny, and then became a copper coin as inflation took its toll. So, the history of inflation in Rome is a very interesting history, because you can see Rome falling in the quality of their coins and the quality of the portraits of the emperors. So when Rome is at its high, you get these fabulous portraits, even on the smallest coins, of an emperor. Beautiful. And then it suddenly gets more cartoon-like and more cartoon-like, and before you know it, it's like a child's done it. And over the 300 or 400 years of their fall, you see their coinage disintegrate. It has renaissances as the Roman Empire makes comebacks, but it's always on that downhill slope. And in the end, the fall of Rome the Victorians used to put it down to anything the people in the 19th century hated, like too much sex, inflation, stuff like that. They put down the fall of the Roman Empire to those things. Whereas in reality, Roman Empire probably fell because they had plagues that decimated their population. So there wasn't anybody there after the first set of plagues. The first one was around Marcus Aurelius' time, which was probably smallpox. And then there was the plague of Justinian. But basically, those plagues basically decimated the cities, and they were city-based culture, as we are today. And if you look at New York, it looks pretty decimated, doesn't it? And those plagues was what took down the Roman Empire, because you've got no soldiers, you've got no way of defending yourself. And the other guys, they didn't live in cities, so they had automatic social distancing, so they didn't get. Well, they did get the plagues, but they didn't get them as much. So their population stayed up while the Roman population fell. The Romans said, we've got lots of money, we've got lots of sophistication, we'll hire you as mercenaries to fight for us. But, that was only so long before the mercenaries get to be in charge. And all the time, the coins are telling the story of that. And it's interesting because you can buy a Roman coin, a silver Roman coin of a Nero or Caligula or a Julius Caesar for 50, 60, 70 bucks. There's still so many of them out there, and so many get found. Anybody with any money at all can buy and get a collection of lovely Roman coin numismatic history.
On that note, numismatics, what do you know about that market? It's something that I think, especially the US gold investor, at least that's with whom I'm most familiar, is actually kind of warned to stay away from oftentimes. Pre 65 numismatics don't carry the lower premium of the bullion products, which oftentimes the US consumer is interested in purchasing on the bullion front. But there is this very rich history of gold, as you've outlined some of it today. And there's many different semi-numismatic and numismatic options with premiums that fluctuate over time. They get
Justin,
high.
I'm going to disagree with you because I'm going to say the sort of thing you're talking about is not numismatics.
Okay, yeah, what are numismatics?
Well, numismatics, I'm not going to try to pronounce it. Numismatics is collecting coins for the sake of it, for the sake of them being coins. You don't collect them because they're gold. You don't collect them because they're silver or bronze or tin. I found a coin in the field last year. It was the coin of Tiberius, a denarii of Tiberius. It was actually perfect condition. It came out of the ground like it was minted yesterday, and that is the Jesus penny, the tribute penny. It was actually a tribute penny, which is what Jesus said to I think it was the Pharisees: "Give unto Caesar what is Caesar's." You don't collect it because of the silver. You collect it because that's a direct link to the Bible and Jesus telling his inquisitors that you should pay your taxes. That's what numismatics is, not buying a gold coin because it's worth $1,400 in gold. If you want to buy coins for their precious metal, there's lots of options available to you, and you'll pay a high premium because getting physicals is very difficult right now, and everybody has swept them up. And there's so much linkage between the person that wants to buy a bit of gold and the gold mine, so many middlemen, that there's no real demand and supply linkage, because it can easily be turned into a financial instrument which is only partially backed by gold. Fractional reserve banking. Gold has always been, even when it was money, was always fractional reserve banking, because the history of banking is, let's just say you've got 50 grand, all your money, 50 grand in gold. You're sweating, aren't you? Because it's under your bed. And they all know that Justin's got 50 grand and it's under his bed probably. And his hut isn't so big, or his house isn't so big, and maybe anybody can steal that. So you can do all sorts of things to secure it. But the best thing to do is go down to Mr. Goldberg, the goldsmith, and say, "Goldsmith, you got a big safe, haven't you?" And they'll say, "Yeah. And what about it?" I say, "Well, can you keep my 50 grand of gold in it?" He says, "Yeah, sure thing. I'll charge you a little bit, but I'll keep it for you. And here's a receipt." Well, there's your paper money right there. And the goldsmiths put all the gold in their safe because they could be trusted. And you could always come and get your gold out. It might not be the same gold because you only put it in on weight. And he'd test it to make sure you weren't passing anything off on him. And he was the goldsmith. He became bank. And it was always the fact that nobody ever showed up all at once to take the gold out, so that you could only have 10% in the actual vault. So money might have been gold, but there's probably only 10% of it in the vault. The goldsmith might have made it into a big goblet and sold it to somebody and got silver for it. And he might have given that, and he gave another receipt to another person, and you took your receipt and you gave it to another person who gave you something else. And those receipts went round and round and round and round. That's the history of finance. So it's never been a time, certainly not in the last 600 or 700 years, where gold hasn't been paper money, or paper money of sorts, hasn't been a system of fractional reserve banking. That's where it all comes from. So, people who want to buy coins have to realize that even though they're out of stock, the linkage down between the coin maker and the guy that sent the gold, and the guy that refined the gold, and the guy that sold the concentrate, and the guy that dug the concentrate up, and the guys that went down the mine to get the concentrate out, there's so many links. And there's people selling, you buy shares in the gold company, you buy shares in the ETF, you can buy shares in options on the ETF, or it's never ending. So that linkage means that demand and supply isn't necessarily that direct, and that's why the gold price isn't moving. But if you want to buy little bars or rounds, or the best of all, which is old American coins when they were 50% silver at little low, if you can still get them, because I think they've kind of gone off the market in the last few years, funnily enough. That's the best way to buy raw silver, unless you can find somebody like a Kitco or a bullion vault that you trust. It's all about trust at that level, that you can buy the gold and they keep it in a vault in Zurich or wherever you want it kept. But that is, if you want to buy silver or gold in coin form, that's not numismatics. You're buying rounds, as they call them. They're not allowed to call them coins when they make these silver ounces, for example. Not allowed to call them coins. You could get locked up for that by the feds because they say we do currency, not you. Yeah. But if you want to collect beautiful works of art or interesting pieces of history, then that's a different matter. And there you have to use the poker principle, which is if you can't see the fool at the table, it's you. You really have to know why you're buying this stuff. You really have to know what the prices are. And you really have to know that, like any antique dealer, they're going to say, hey, great, it's one of a kind, it's unique. Unique, you mean they made 10,000 of them? Oh, it's beautiful. Cameo, special this, special that, special the other. So, you're in the world of antiques, and then that's a world of negotiation, and it's a skill game. It's a skill game. Unless you do a little bit of homework and you buy it for the pleasure of owning a bit of history, and then the money's not important. But then you're kind of not investing, because the thing about investing, objects pay you in kind. And if you get pleasure from something, you'll pay more money for it. And therefore your investment return will be lower, but you'll get so much dollars worth of pleasure from it. So the more pleasure you get from it, the less investment return you're going to get from it. So, if you really love, I bought the 1933 penny a few years ago. I loved that. I absolutely loved that. But I nearly caught a cold on it because it was only one of 4 of the 1933 proof coins. I had to have that because as a child, about the 1933 penny. I had to have it. So I guess whose nose got paid through by it. But anyway, so, that is the risk of buying what you love. You're paid too much for it. So that's not really investing. You're speechless, Justin.
What is the 1933 penny?
Oh, it's a UK thing. They decided not to make a 1933 penny, but they made 7 for to mark famous buildings that would be built that year. So they said, we'll make 7, and then you can, if you're building a church, we'll give you one, and you can put it underneath the church. So in 1,000 years, I'll know when you built it. And they made 4 proofs, which was 4 to show to the mint, hey, we want to do one like that. We want to do one like that. We want to do one like that. And so there's 7 currency coins and there's 4 proofs. But it's like every kid, when I was a kid, all 15 years ago, everybody used to collect pennies, old English pennies, and you would try to get a collection of pennies, or one for every year. You didn't care what condition they were in. But the one they couldn't get was the 1933 because they never made any apart from those 7 and the 4 proofs. And kid wouldn't know about what proof was, but so there was only 7 of them, and you just hoped and prayed that they will pop up in your change by some miracle.
All right, that's a really interesting look at numismatics, which don't just include precious metals containing coins. And I want to talk about how you yourself find these coins. You mentioned you just found a denarius.
Oh, well, that's treasure hunting for you. That's metal detecting. And
tell me about it. Yeah, tell us about treasure hunting.
Okay, it's not a long conversation for your audience. You make about $1 an hour. Okay. It's like fishing without cruelty to fish. So, but it's much better in Europe because Europe's had 2,000, 3,000 years of people walking around dropping stuff. Whereas in America, of course, it's only 300 or 400 years. But, I have a lot of American treasure hunting friends. And in fact, I have a famous one right in my lounge right now. And we're about to go off into France and do some interesting stuff. And, this is the Holy Land for treasure hunting is really Great Britain and France and Netherlands and Germany, because there's so much history to find. And, most things that were owned were lost. And, you can walk across. Well, it's like in America, if you know where to go, you can walk across the fields and find arrowheads and stuff like that. Because there's been a lot of people around there. They've all dropped stuff. And in Europe, they all had small change, particularly in France, where they practically invented small change. And, you'll find a coin 500 years old every 45 minutes or so. And you're hoping you have to find 100 copper coins to find 1 silver. And then you have to find 100 silver to find 1 gold. So to find 1 gold, you have to do, 5,000 hours. And you might get a coin worth $700. Yay! But, it's a very cheap pastime once you bought your equipment. And it's very good for you. When you're a young, fit, thin guy like me, It's about the best exercise you can get.
What do people need to know about the equipment?
Well, buy a detector about $500 and a nice sturdy spade that you don't mind carrying for 4 hours or 5 hours, and you're done. It's all out there. I mean, there's people like Garrett, there's people like XP Deus who make the machine that's the best, in my opinion, and there's people like MineLab, and they, top end machines will give you a decade of pleasure if that's your sort of thing, if history is your sort of thing, and digging up loads of rusty old coins. But of course, if you hit the big one, and you do get people that do hit the big one. Another friend of mine found a box of silver coins from about 1810. I think it was 80 silver coins in a river. And actually, if you type "guy finds 80 silver coins in a river" into YouTube, you can watch him do it. I'm going to give him a name check. Aquachigger. There we go. Aquachigger, you owe me one.
The gold art market, what are your thoughts there? I think that's a very intriguing market. I don't think it's actually a very large market. So that is art that's created with the use of, in some way, gold, silver, platinum, palladium, any sort of metal. I've been purchasing these things. Let's see if I can get you a good view. And this is a baseball card of 1 gram platinum. This is an Alex Rodriguez, otherwise known now as Jennifer Lopez's ex. And so he was a baseball player. There's 25 of these platinum versions made, and it's 1 gram of platinum. Now, I love this. I'm getting a lot of pleasure out of it, but I'm also not convinced that I'm necessarily going to be underwater for the long term on that. So what are your thoughts generally about the gold art market, or actually the precious metals art market?
Well, I find it hard to get excited about a baseball player when I can buy a gold Roman ring for $2,000. With a stone in it, or a pair of Roman earrings for $500. The antiquities out there in gold they can be 40, 50 grand, but you'd be amazed at 4-figure gold antiquities. I mean, you could just do a Google search and search a few antiquity auctions, and you'll see the stuff, and you'll go, I don't believe that. Most Americans go, that can't be right. That can't be true. I mean, people like Bulgaria have been famous for getting Greek silver coins and embedding them in necklaces and charging like 20 grand. It always makes me chuckle that they put or a Roman copper coin, which is worth of all of $5, and putting it in a necklace and charging 5 grand. And why do people buy a necklace with a Roman coin in it? Because they think the Roman coin's precious, and in a way, it's priceless. But in terms of financial cost, it's low. So, I must say, trading cards, all this NFT stuff. I don't know. I'm a lover of history. I like to think about this stuff. I mean, I tell you, if you really want to buy silver at silver value, just go and buy knives and forks. They give that stuff away. Literally, you can buy a big punch bowl of silver, 200 ounces, for the price of 100 ounces at auction. You might pay a 20% uplift for the buyer's premium. But they sell beautiful silver objects from the 1900s, 1800s for the price of the silver. You could buy it all day long because there's piles of it. But of course, you've got to secure it. That's the thing. You've got to secure it. And who wants a house full of silver tureens and spoons and knives when some guy's going to come and visit and relieve you of them in the middle of the night? That is the major problem. For me, anyway, for precious metals. So that's why I don't keep precious metals in the house. And there's no point, because if you have a Roman wine jug that's worth a few tens of thousands, you'll never get troubled. If you have $1,000 of gold and anybody finds out about it, you can almost guarantee a knock on the door. So precious metals do have that attraction to the wrong crowd, and that makes them difficult to secure. Get a bank, get a safe deposit box, put it in there. Yeah, that's right. Have a Kitco keep it for you. Yeah, that's right. Buy shares, can't get robbed of those. Buy an ETF, etc., etc., etc. But physicals, I think they're problematic. And also, you can't. If you ever wanted to up sticks, suddenly you decided that Godzilla's going to break into your town and crush everybody, and you want to drive. You don't want a boot full of precious metals, do you? Oh, trunk, sorry. I'm in the wrong country there. You don't want a trunk full of precious metals. Or maybe you
Then
do. I don't know. I prefer not to.
you mentioned that it's like it's flight capital. What does that mean? How does
Well,
it?
it means that historically, people would put their money in silver and gold because they could leave with it in a hurry, but particularly gold, because you can carry 10, 20 kilos with you. But of course, if you happen to be the minister of whatever it is in Afghanistan and you have to lose $5 million of cash on the tarmac because the helicopter can't take any more of your money, it isn't actually great for flight these days if you've got serious quantities of money, which a lot of people do. So for the rich, gold is not really flight capital anymore, because you can't run with it. You can't put it in a suitcase and run because you can't run with that much. Which of course is where crypto comes in, because you can get on a helicopter out of Kabul with 100 million in crypto in your pocket, no problem.
The importance of dividends when investing in gold. Can you speak to the junior mining market in particular and what's going on there?
Well, dividends, I think that has an audience, and a lot of people don't want them because they don't want to pay tax on them. Yeah, and they prefer it to roll up in the company. So, like an Amazon, I don't think they pay a dividend, but they one day maybe they will. But I know Apple does. But if you take a tech company and it's going to go from $1 to $15, you don't pay out a dividend. You just want them to keep it and grow their business. So you don't want the tax bill. You get the tax slice every year. Oh, that's not happy, is it? So a lot of people don't want a dividend, but some people, retirees, for example, or me, I like my dividends. And I like them stacking up because as the market doesn't really like them very much, they're underrated, and you can get pretty much a business that's X as good as Y is good without a dividend. You get the same price, but you get a dividend on top. So I like dividends, and no one can take a dividend away once you've got it and you cashed it. They can't come around and say, yes, that dividend, we want it back. Our share price has fallen. But whereas, you could wake up one day and Apple was halved. Well, probably not, but you know what I mean. The ups and downs of equities are something that is nice to have avoided. So you've held this share for 10 years, buying and holding it, and you've been getting 2%. Oh, that's nice, 20% over those 10 years. In fact, more. But, that's a nice thing. And if you buy a company which is cheap, got a big dividend, you're still getting that return on capital even when it goes up. Even when everyone else is only getting 1% on it, you're still getting your 10% on your original investment. But if you look at gold mines, it depends on what you're there for. If there's a mine that believes it's got a solid, mountain of gold in somewhere obscure in Antarctica, then it's not going to pay dividends because it's not digging it up. It will be drilling it and proving or indicating how much gold there is there, and then looking to sell it on. And you're looking at that big, it's a gold mine. Maybe it's got 1 million ounces. So let's write that down to perhaps 100,000 ounces. Oh, gold price has doubled. Wow, the cost of production means that their profit margin has now gone up 500%. Because if you look at mines, they've got that much cost and that much profit. Well, when gold price goes up, the profit goes, up way, way, way more than the gold price has. So it's a leverage play. And the further you get down into speculation, the more leverage you get. So you got this mine, it's crazy. It's been crazy forever, and everyone knows it's crazy. But it will explode when gold goes up. Whereas a big gold miner that's rolling in gold and got so much gold they keep in a warehouse, and they, those sort of gold mines, they will go up more than the gold price too, but they won't go up tenfold. They'll go up, maybe a factor. If gold doubles, they'll go up 3 times. So as you get down to the speculative end, you get way more upside, but you also get way more downside as well because it's so much more risky.
Where can people find some of the best paying dividends today as it relates to either junior mining or generally?
Well, I mean, there's lots of sites that will let you filter by dividend. And, America's not necessarily the greatest place to get a dividend, but there's lots of ADRs for companies that are outside of America that are big companies that pay dividends that you can get. So, if you go on to all sorts of sites, like our own site, you can just go, give me everybody with more than a 3% dividend. Oh, that's quite a long list. Give me everybody with more of a 3% dividend and a market cap of more than $1 billion. Oh, there's a nice list. Oh, make that 10 billion. Oh, I'll make that. Oh, I don't want anything with more of PE of 20. And so you just narrow down to whatever you want, and then you get a nice list. That's how I always do it anyway.
Now let's take a step back. What is a dividend?
Okay, well, the theory on companies is people invest money to build a business, and the business goes off and makes a profit, and that profit is handed out to the shareholders who invested in that business as a reward for their risk. That's the basis of joint stock companies that go back to whenever it's 1600s and coffee shops in London. Well, things have moved on since then. So a lot of companies, they don't hand out a dividend. Maybe they don't make a profit even. How many of all those unicorns out there that VCs are turning into billion-dollar businesses have ever made a profit or aren't making a huge loss? So they've got no money to hand out in terms of dividends. But at a certain point, companies will get to a stage where they think, well, we can't really grow much more, but we're throwing off all this cash. So rather than us go around and buy lots of things on the hope that they're going to be successful, we'll just hand back the money to shareholders, and you do that in a dividend. I mean, Apple's a good example. Apple's paying a dividend, has for several years now, and it was making so much money. It went, oh, well, I suppose we can't give some back. I mean, they got more cash than, well, still got more cash than the American government. That's not saying much, but they got cash coming out of their ears, so they pay some of it back to the people that to the investors in that company. I think it was 1% when I last looked, but I must say I haven't looked for years.
Any other comments on dividends as it relates to junior miners?
Dividends and junior miners, I think you go a long way to find any, because junior miners tend not to pay them. But I mean, it depends how junior you want to get, really. And if you want to look at miners in the way of miners that are looking for resources, miners that have found them and are making them attractive to be bought, miners that are mining, just huge miners. You've got a kind of a spectrum of different miners, and some of them, the ones that are trying to find stuff will not be paying a dividend. The ones that are proving up the mines will probably not be paying a dividend. The ones that start to actually dig the stuff up, and as we all know, the best way to ruin a gold mine is to start digging it up. But the ones that have got past that phase of improved and are mining, they will often have a dividend. But some of them won't. Some of them will just keep all the gold and say, well, we're worth more now. But a lot of them are paying. And a lot of the gigantic miners, the Anglo-Americans, the Rios, the BH Broken Hill Properties, they pay fabulous dividends. I mean, Rios, BHP, I think, has paid 11% dividend, which is, amazing. So, yeah, it's normally the big miners that pay the dividends.
And any comments on the big miners paying dividends?
Well, the question always with dividends is, are they going to pay them next year? Are they going to pay them the year after? Are they going to pay them the year after? Are they sustainable? The miners had a massive couple of years. Well, when it came out of COVID, they had a massive year because commodity prices went up. Funnily enough, commodities prices went up because so much money gets printed. When you see, a commodities price never goes up. It's only the value of money that goes down. Yeah, and if you could nail the value of money to one place, and they've had a good go at that over the last 20 or 30 years, they had driven inflation out of the system. In fact, they're worried about deflation. But if you could just see, you could hold it still, then the commodities would go down in value because they keep making better technology to get them stuff out of the ground. But it's not overnight. They don't make, sort of Star Trek breakthroughs. Somebody comes up with an idea, and 5 years later, they brought the cost down by 5%. And it's slow but surely bringing down the cost that would bring a commodities price down. But from day to day, from month to month, even from year to year, the real cost of getting a commodity out of the ground remains the same. So if you devalue a currency, if you depreciate it by increasing the supply of it without increasing the supply of stuff that it can buy, that's what creates inflation. You make more money and you make more stuff that it can buy. So obviously more money chasing the same stuff makes the price go up. Or you can consider it being devalued. A commodity, you can't get a Chinese factory to run another shift. That's not the way that it works. You can't suddenly, just put the price down because your margins are so fat. The price has to reflect the fundamental cost of labor, or if you want to back it out even further, the fundamental cost of energy, because energy plus mud equals stuff, right? Or as Karl Marx would say, work equals stuff. Yeah. Well, work is energy these days, so you can't fake that. You can't bring down those costs. There's no cost to bring down. So when the value of money goes down, commodities goes up. So all the miners got all this updraft of inflation to their commodities. So lots of commodities have gone mad. One month it's coffee, next month it's sugar, next month it's gold or whatever. They've all had that updraft. So they've made super profits. Now, is that going to carry on? I think it probably will, certainly for another 2 or 3 years. And, the world either goes into recession, depression, and we're all in a bit of a pickle, and gold won't help you there. Or it's going to be a world of inflation as the governments and their central banks paper over this chasm that the plague of COVID has caused. I mean, the vast amount of wealth that has been lost because of COVID has had to be papered over by creating money and by creating inflation. It's the only way to bridge that gap. If they hadn't done it, I mean, people go, oh, it's bad, it shouldn't, it's all wrong that happened. And I think that's very, very wrong. We're all sitting in a house. We're all sitting in a house that's got a lot of value, and we all think we're clever because we've got a house that's worth a lot of money. I tell you, if they hadn't bailed out the economy with printing all this money, house prices would have collapsed. Businesses would have collapsed. Banks would have collapsed. Your savings would have gone. Your pension would have vanished. Your house price would have collapsed. Or you can get 7 or 8% inflation every year for the next 5 years. Which one do you want? Do you want to live in a smoking crater, or do you want to live in an environment with 7 or 8% inflation? And I think most people would say 7 or 8% inflation, because ultimately, unless you have gone off grid, unless you are putting all your money into bullets and corned beef, you don't want house prices to collapse. You don't want banks to fail. You don't want your business that you work for to go bust. You don't want GE to go to the wall. You don't want Amazon, Apple share price to collapse because no one can buy an iPhone, do you? So, printing money to paper over that, setback, that destruction of wealth that COVID has caused is actually not as bad as a lot of people think. And I know your viewers will say, inflation is bad, it's evil, buy gold, buy silver. Well, I tell you, it's the same with 2008. All the banks would have collapsed. GE, for example, was on the edge of collapse. All those big corporations would have collapsed. Then what? Do you really hold a grudge with a bit of inflation because to save the whole of the global economy? I think that's short-sighted. I don't think people realize just what a pyramid of financial services we sit atop of.
All right, so I'm looking you to be feeling better about my platinum silly baseball card here. Now, you mentioned a platinum wave, and this is 1 gram platinum, as I mentioned. What is the coming platinum wave?
Well, Justin, I'm going to say, how much did you pay for that?
$275.
How much pleasure has it given you?
Enough. It's not a big deal.
So it's giving you $275 of pleasure. So now that's free, isn't it?
Yeah, so I'm not too worried. I'm going to actually send it in to get graded. Who knows what will come of that? I'll pay a little bit more, and I don't think I'll be too far under. I don't know. We'll see. I mean, I'm not too worried about that.
Brakes for $275, you'd expect it to be worth $275. If you buy a thing that gives you pleasure, you're gonna pay a premium for that pleasure. Nothing's for free. No free lunches, even when it comes to pleasure, as I'm sure a lot of people have found out.
And we were running out of time, but I will say briefly, another thing I do is I film a video of me unboxing it. People like this on social media. So now it's like I've got some content. I paid $275 for a video that's going to get some people on the channel. I'm going to get some brand recognition. Maybe I'm going to bring in some people who think about baseball and sports. And now they're going to stumble upon this interview and listen about the Nereus's and a little bit of inflation versus financial crater. So I did the platinum wave. What is that?
Well, look, this applies to lots of fancy metals that a lot of people won't have heard of. Yeah, because all these exotic metals, which are relatively rare, are really, really useful for modern technology. So there's a lot of silver, for example, in a mobile phone, so I'm told. And I believe them. I haven't seen myself, I haven't ripped my iPhone to pieces, but, connectors and stuff like that. Well, when it comes to things like the hydrogen economy, which needs fuel cells, it uses things like platinum in the fuel cell, because platinum is a catalyst and makes things react faster. And the beautiful thing about fuel cells is you pipe hydrogen through it and oxygen through it, probably out of the air that you breathe, and out comes water and energy, electricity and water. So non-polluting. Now, the good thing about hydrogen, so at the moment, everyone thinks of alternative energy or what's the word for it? Sustainable energy. They think of windmills. They think of tidal wave, tidal energy. They think of solar. Well, that stuff is not on 24/7, unlike a nuclear power station or a coal power station or an oil power station. So you've got to store it somewhere. So you need to have batteries for it, or you need to store it in some other way. Well, it's a very good way to take electricity and put it in a bit of salty water and get hydrogen and oxygen out, store the hydrogen, and you can switch the hydrogen on and off to create electricity. Or if you really wanted to, I don't think anyone plans to, but you can even burn it. Yeah. So you can take your electricity from your solar panel during the day, turn it into hydrogen, and then burn the hydrogen at night. So the creation of hydrogen and turning it back into electricity involves lots of clever metals like platinum, palladium, and that sort of stuff. And therefore, you can see that a metal which is only 100 tons a year comes out of the ground. Please check on that one. It might be 10, it might be 1,000. It's a ridiculously small number. When you think that that's going to play a major role of the platinum group metals in the whole alternative energy world in the next 10, 20 years. And it is here already. I mean, there's already power shortages in Europe because they switched off a lot too much coal. And now they're a bit colder in the winter. So the drive towards this sustainable energy is going to be fueled, and all our technology, by all these crazy metals like iridium and all the other ones. I was going to say thorium, but that's radioactive, and platinum and palladium and all these many exotic metals. So miners of exotic metals, very interesting. And the platinum guys, they're rock bottom cheap right now, in my opinion. I can't believe how inexpensive. If you look, and I own this stock up to the ears, Sabani Stillwater, SBSW, I think the ticker is. And you look at it and you go, well, it's gone up a lot, funnily enough. It's making a ton of money. It's paying a fat dividend. And it's about one of the only, well, it's not one of the only, one of a very few handfuls of people that make platinum, palladium in any scale. And there it is, cheap as chips. So that is something that I find fascinating, because I'm either massively wrong or the market is not woken up to it yet. And I can't understand why they haven't, because it's staring you in the face that the world's going hydrogen and it's going to use platinum and palladium. I mean, palladium went through, absolutely exploded a couple of years ago, and that's why they're making so much money. But platinum's bound to follow. I can't see how it can't.
The jewelry market collapsed overall. Can you speak to the dynamics there? So namely that it collapsed, and now that it's making a comeback, what impact that will have on gold?
If you think about the large consumers of gold, places like India, it's for storing wealth by carrying it. And I had a friend in India a few years ago, and he said, well, it's not wealth if you can't carry it. Back to flight capital. Well, it's difficult to carry much wealth. But if you're going to carry it, you carry it in gold. And India in particular is a big buyer of gold for that purpose. And of course, when everyone's locked down, you're not going to buy a bracelet, are you, if you're going to be locked in your flat for the next year? It's not something, and you're not going to go down the jewelry store and say, oh, darling, can you buy me that earring? It's not going to happen, is it? So the overall jewelry demand collapsed during COVID. And that, I believe, roughly speaking, was 0.25% of the consumption of gold. Now it's back, but it's not back to the same level again. And whether they catch up or not is another matter. But once we're out the way of Omicron, which Omicron levels are already collapsing in the UK right now, so it will be like all proper plagues. It will come and go fast because it's let to run riot. Then after Omicron, if there's not another coming down the pike, the world will slowly but surely return to something similar to where it was before. And when it comes to buying gold, it's going to certainly go back there. And then you're going to have all the central banks buy, all the people that have been buying gold recently, plus the return of the jewelry market. And let me tell you a story. There's a company that I know who are reporting, who make gold coins. Okay, they're quite famous. They made gold coins for a long period of time. They couldn't get the gold discs because they don't make the gold discs anymore. They would have made them 100 years ago, but they just buy gold discs and they ship them in and they go boom, 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 boom. They couldn't buy enough of them. And this is a huge organization that does nothing all day but hammer gold coins into ones that you would buy. Couldn't get the gold. It wasn't there to be had. Did gold go up? No, it didn't, because that chain link all the way back to the mine is so messed up that it's little to do with the physical gold. However, when the physical gold does start to grind away and the demand does go up, and look, miners don't hedge anymore because they fed up with being shafted by the investment banks and all the funds and everybody in between. At some point, it happens slowly and then all at once, as the saying goes. And I think that's what we'll see. It'll go tickety, 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 bang. Now, one other thing. I buy all this gold. I've got gold coming out my ears. I've got gold everywhere. I keep tripping over my gold. And it's not going up. I go, what is going on here? Why isn't it going up? We've got inflation, for goodness sake. Mind you, people were saying, no, we haven't got inflation. And then they were saying, oh, no, it's only here for a bit. And now it's here. Right. It was always going to be here, and now it's here. So I could say, well, they've been inflation deniers. But I looked at the 1970s. Now, if you plot the gold price from 1970 to like 1981, right in the middle of the worst part of inflation, gold goes down for 2 years. And I hadn't realised that. In my childhood, I would imagine just went up and up and up and up and up and up and up. And boy, did it go up. But actually, it took a dip for 2 years, right in the middle of the worst of the inflation. So, gold isn't destined to go up always in a straight line under inflation. So that made me a little bit more relaxed when gold was going down and inflation was going up, and I was scratching my head in the 70s, because everyone would say, well, it was like the 70s, you just buy it and it goes up 4 times. I mean, why would you not do that? Well, the answer is maybe you might get a worry around 73 and 74 when it went down, or whatever the years were, and you can go see that yourself. You can just go get the gold price and plot it at the end of every year, and you'll see it wasn't going up every year. And the 70s were just catastrophic for inflation if you had cash. If you had debt, it was a great year. It was a great 10 years, borrow lots of money and let inflation destroy your debt and add value to your asset that you bought.
All right. Last question regarding deflation. What should people keep an eye on when it comes to deflation?
Deflation? Really? Okay, can't see that. What they're going to do? Unprint money? I mean, yeah, they're going to tighten, and then all the big highly leveraged companies are going to collapse, and their tax revenue is going to collapse, and then they're not going to be able to pay their fat government salaries and pensions. Yeah, that's going to happen. I mean, just think about this, right? Inflation. Anybody that's economically active is getting paid more. All right, they haven't got savings. They're economically active. They're borrowing money. They're buying things. They're running around, and money's all over the place, and everyone's going, yeah, party time, right? Now, poor people that are not economically active, that are retired, and maybe they've sold their house. If they've got a house, they're laughing too, right? So who exactly is hurt by inflation? Scrooge is hurt by inflation, not people that are economically active or have assets. Yeah, people who've got cash are hurt. Nobody else. Yeah, it's a flat tax that nobody notices. I mean, they might notice a little bit. Most people don't notice it, right? Poor don't notice it. The rich don't care. Those guys in the middle, if they've got debt, they don't care either. So what happens? There's more tax, GDP goes up, everyone's having a party, and, at the end of 10 years, you go, oh, blimey, that hamburger is now $50 a hamburger. I remember the day when it was 25 cents. Yeah? Deflation. Okay, tightening. Companies can't borrow money. They go bust. They're not paying tax anymore. Unemployment goes up. People are unemployed. They can't eat. Have to take to crime. Yeah? So tax isn't getting paid. So people in government can't pay themselves. So they have to start laying off people. Oh dear, government laying off people. What a disaster that would be. But let's just say they're not going to be very keen on that, are they? The GDP shrinks. The tax shrinks more. They have to lay off more people. More companies go bust. More people unemployed. Everybody's miserable. Everybody is angry. Everybody's, start shooting at each other. So what are you going to do? Print money and get inflation? Or go, oh, it's very naughty of us to make inflation. Let's deflate. Let's put ourselves out of a job. I'm not going to get voted in now because I've ruined everybody's party. I'm not going to get voted in. You're going to get angry. Everyone's going to get fired. All the companies are going to collapse. We're going to go into a death spiral. Who's going to sign up for that? They're not going to, are they? You wouldn't want to either. Inflation, everybody has a party apart from a few people that have been counting their money. Only, count more money. Cash, got more cash. Yeah, they're the ones that get hurt. Yeah? All right, people can't go on a cruise to the Caribbean anymore and just have to go to the beach, perhaps some people. But all the economically active who are borrowed up to their ears in real estate and anything they wanted to buy, they get a break because that money they borrowed just withers away. That your house You become a multimillionaire on your house, etc., etc. So the political dynamic to create deflation, to create tightening, is never going to happen. Inflation, on the other hand, you'd be mad not to do it. So, well, maybe it will come. Maybe watch out for it. But they might be going, oh, we're going to tighten, we're going to tighten, we're going to tighten. When are you going to tighten? Then, no, we're going to tighten, we're going to tighten. You're not tightening, are you? Oh, we're tightening, we're tightening. That doesn't look like tightening. Oh, it's tightening, really? They tried it in 2018. Have a look at what happened to the stock market. It went. Then he did it for 5 months, had to do a handbrake turn and then do a QE to put it back to where it was before they tried that one on. You have to understand money is an illusion, apart from when you don't have it.
There you have it, folks. We've had the honor and privilege of sitting down today with Clem Chambers. Clem is an author, journalist, and CEO of ADVFN and Investors Hub. These are leading stock and market websites. Thank you so much, Clem, for joining us today.
It was fun, Justin. See you soon.
Pleasure's all mine. Thank you.
Bye-bye.
All right. So what I'm going to do is this is going to be published, and I'm going to have like 10 to probably 20 clips. So those will go out too for a while.
Great.
So
Great.
I'll send
Make
this
sure
to you.
I'm not scratching my nose.
Oh, yep. I'll take that out today. Thank you so much, Clem.
Cheers, Justin. Bye-bye.
Goodbye.